Jim's Lawn Care, the first chapter's illustration that I use in the classroom to explain how to record business transactions in the form of increasing and decreasing accounts. You'll notice at the top of the sheet that we have the accounting equation in the form of assets equal liabilities plus owner's equity. You'll further notice that the owner's equity is made up of capital stock plus retained earnings. Okay, and that's all in the bigger rectangle. Within that inner rectangle, you'll notice that retained earnings is what I call an accumulation of revenues minus expenses minus dividends. Okay, we add revenues, we subtract expenses, and we subtract dividends. Okay, now line item 1 in transaction 1 says Jim Hamilton began a lawn care business in May by depositing $800 in a business bank account in exchange for capital stock. So we try to identify the accounts affected, and we would see that for the business, cash is affected and capital stock. Cash is being increased by $800 and capital stock is being increased by $800. Number 2 says purchased lawnmowers and other equipment on account, $1,000. To identify the accounts affected, we would identify them as the asset account, lawn care equipment, and the liability account, accounts payable, because we've bought it on account. We have not paid for it yet. So we increase lawn care equipment and asset account by $1,000, and we increase accounts payable by $1,000 because now we owe $1,000 more than we did previously. Transaction 3 says we paid cash for supplies, $50. To identify the accounts affected, we have cash and we have supplies. All right, and supplies is being used as an asset account, so that we're going to add to our supplies, and then when we use them, we're going to take them out, and you'll learn that in a later chapter. All right, so we've got subtraction. We've got $50 being subtracted from cash, and we've got $50 being added to supplies. Now let's stop here for a moment after these transactions and notice that each transaction we have maintained the equality of the accounting equation. On the first one, we added $800 on the left-hand side, the asset section, left-hand side of the equal sign, and on the right-hand side, we also added $800 in the form of capital stock. Second transaction, you'll notice that we kept the accounting equation in balance because we added $1,000 to each side. On this third transaction we just covered, you'll notice that we maintained equality because we subtracted and added $50 to one side. When you add and subtract the same amount on one side of the equation, you effectively add 0. So therefore it's no change on either side is the net. Number 4 says performed lawn care services for credit customers and billed them $700. Now when we sell on credit, we are creating an account, we are adding to an account called accounts receivable, and that means customers owe us that amount of money. Okay, that's monies that are owed to us. And we're going to increase that by $700. And then we did this this occurred by performing lawn care services, so we earned revenue. In other words, we're going to increase our revenue account by $700. Hence adding $700 to both sides. Number 5 says receives the $700 cash from the customers billed in number 4. This is referring to the prior transaction. So now we are going to add $700 cash and subtract $700 from the accounts receivable, a net effect of 0 to the accounting equation. Number 6 says paid $1,000 cash for the lawn care equipment and purchased in number 2. All right, so now we're paying off our liability. This is like you paying off your credit card. What happens? $1,000 is subtracted from the cash account, and $1,000 is subtracted from the accounts payable. Number 7 says paid for an advertisement in a local newspaper, $150. So what happens? We have $150 going out, which is why I show minus 150, and the expenses are going to have $150 added to them. Now, technically you're increasing expenses by 150, but remember, when you're increasing expenses, you are decreasing retained earnings. Why? Because retained earnings is revenues minus expenses minus dividends. Okay, so we are effectively subtracting $150 from both sides because we have effectively subtracted from retained earnings. Excuse me. Number 8 says, perform lawn care services for cash customers and immediately received $420. Okay, so we've got our money right now. So we're going to add to cash $420, and we're going to add to revenues $400. And remember, revenues is part of our retained earnings. Number 9 says, paid wages to a part-time assistant, $85. Okay, so we've got $85 going out. We're decreasing cash. And we are also, remember, increasing expenses by 85, but the little minus sign is because we are effectively subtracting from retained earnings, which is what the overarching account is, that revenues minus expenses minus dividends will equal. And you're going to kind of just have to take my word on this. You'll see in chapter 4, when we get all the way through this, how that ends up working the way it does. And in reality, you're going to figure this out or see this again when you look at the video for the financial statements, also in this chapter. Number 10 says, perform lawn care services for credit customers and bill them $600. Okay, we've had a transaction like this before. Customer owes us the money, so we are going to increase accounts receivable and increase revenues. And effectively increasing revenues is effectively increasing retained earnings. 11 says, received an invoice from Gas & Go for gasoline purchased on account during May, $110. The invoice will not be paid until next month. Okay, that means if we receive the invoice, we've incurred the expense, but we're not paying for it yet, so we owe the money. Owe means account payable, liability. So we are going to increase accounts payable $110, and we are going to increase expenses for $110, which, remember, effectively decreases retained earnings. So we are adding and subtracting $110 from the same side of the equation. Again, net zero effect. 12 says, at the end of May, Jim's Lawn Care paid dividends of $100. We decrease cash and decrease retained earnings in the form of dividends. So that's why we have the minus 100 under the cash column and minus 100 in the dividend column. Again, increasing dividends but decreasing retained earnings, similarly to the expenses that we discussed before. Now, if you take your columns and add them all up, add up the columns all the way across, you'll see I have bolded totals: 535, 600, 50, 1,000. Those are all the asset accounts. Those are the total of the asset accounts at the end of these 12 transactions. The total then is $2,185. Over on the right side of the equal sign, you'll see that I did a subtotal of $1,275 for retained earnings, $1,720 minus $345 minus 100 to get to $1,275. When we add that to capital stock of $800, then we get $2,075 of owner's equity. When we add the owner's equity to the liability account payable of $110, we get $2,185. So you'll notice that both sides of the equal sign are $2,185. In other words, our equation is in balance.